Welcome to this episode of Dividend Discussion. In this series, I really want to give every dividend investor a chance to tell their story. We're going to get to hear things like when and how they got started, mistakes made, lessons learned, and much, much more. My ultimate hope for this series is for the guest, you the viewer, and even myself to be able to take something away from this conversation to make us all better dividend investors. No matter if you're retired and living off of dividends or just got started yesterday, there's always something to share and even more to learn. So if you're interested in being on your very own episode, reach out to me via email at dividendobsession@gmail.com and I'll be in touch. But without further delay, let's get to the interview. Hello and welcome to another episode of Dividend Discussion here on Dividend Obsession. My name is Troy and today I have the pleasure of speaking with Gary, aka Darth Dividend. Gary, go ahead and tell the people a little bit about yourself.
Hi, everybody. And Troy, you have a great YouTube channel, by the way.
Thank you.
So the first thing I want to introduce myself. My name is Gary. I'm a registered nurse. I'm 38 years old. Hopefully soon to be nurse practitioner. I graduated nurse practitioner school in August. Took a few months off to relax, and I'm going to be studying for boards shortly. But I'm 38. And I had a career change at 27. I used to work as an exercise physiologist. I wasn't very happy with my career. I wasn't making much. And I entered a post-bachelor accelerated nursing program at Cuyahoga Community College. And I paid $4,000 in cash, became a nurse with an associate's, which was a really good return investment. Got my RN to BSN paid for by my hospital in 2017 to 2019. And I started nurse practitioner school in the fall of 2020 and just graduated in August 2023. So I took a few months off to relax and actually build up my dividend portfolio for those 6 months. And I'm currently travel nursing to pay off student loans and a little bit of debt.
Yeah, there you go. That's a really good history. First of all, congratulations on all your schooling and getting through that. And
Thank you.
Good luck on you're done with your testing, right?
I'm still studying for boards. I mean, hopefully in a few months I'll take it. So, and then go from there. But the travel nurse pays pretty nice. So if I don't get a nursing job or an NP job right away, I still got the travel nurse gig going.
That's smart. Good fallback plans. That's always smart to have a plan A and plan B. A lot of people are just like so hell bent on plan A that they don't have a fallback plan. And if it doesn't work, they're kind of screwed. So, yeah, that's really good. So, you mentioned that you took some time off after doing all that stuff and accomplishing all those goals to do dividend investing. I mean, when did you start investing specifically? And then what got you into the dividend side of investing from there? Like, did you start with dividends or did you go into that afterwards?
So I started really investing actually in 2019. And it was kind of weird because 2019, I was like, I had a weird sleepless night and I just woke up and I'm like, man, I just thought to myself, is a 401k enough for retirement? Because I don't think it is. So I started doing some digging. I bought like penny stocks just for like, I don't know, a week. And I'm like, I don't like this, you know? So I started to learn about dividend investing and passive income. That's how I started to learn how to dividend invest. And I met some really good people over the years. PPC or PPEN, Gen X dividend investors. So they were very helpful in the beginning, grilled me a little bit to teach me how to dividend invest and just asking advice. And hey, I mean, right now I'm almost at $100,000 for my dividend portfolio in M1 Finance and almost at $50,000 for my E-Trade dividend portfolio. And I have an IRA now. So I really enjoy the art form of dividend investing.
Yeah, that's really good that you mentioned that too. So, like, do you think that this isn't really like a scripted question, but do you think that dividend investing lends itself towards more of the teaching people like the discipline of buying and holding versus other kinds of investing?
I think so. I mean, of course, we're not giving it financial advice on here. It's strictly entertainment purposes only. But dividend investing really taught me how to budget and how to have a little bit more discipline just with money and stuff. I mean, it wasn't never in a lot of debt or anything. I was like debt free once I graduated undergrad. But it's just, budgeting, balancing, the discipline of reinvesting dividends and holding on to that passive income. And really, I think it just helped with the discipline. Honestly, diet and exercise, it did kind of help out because, I mean, I didn't go out a lot, but when I graduated in 2019, I partied. I mean, I got a 4.0 RN to BSN. I needed to party. I did a little bit of partying this past summer. I got a 373 in nurse practitioner school. So I needed to party a little bit, but you know, partying, going out, paying 50, 60, $70 a night, you could be throwing that in realty income or other stocks and getting, having your money make money. So the discipline side is really helpful.
Yeah, yeah, I agree with that. It's one of those things where it's just I feel like other forms of investing tend to lead you towards more of like buying and selling or trying to time the market and this and that, where like a lot of dividend investors, especially the successful ones, that what do? They find quality companies, they buy them, they hold them for long periods of time. And I think that's just not to say that the other forms can't also be beneficial, but I feel like as far as like teaching you characteristics, not just for finance, but also for life, about like, good things come to those who wait. I mean, there's a counter saying to every saying, but like it just teaches you like delayed gratification, which I feel like is like a lost art form.
And some of the influencers on here that are big time guys in the finance community, they make their money off of people and
Mm-hmm.
their books and stuff versus their investment. So
Yep.
you have to be aware of that too, with YouTube channel. So you and I are very transparent with what we do. So I mean, that's transparency is very important as well.
Yeah, yeah, and that's that. I think that's super super important to notice or to note what you just said about like other investors. Like I don't have any courses. I don't have any. There's no follow me on something else so I can make money over there. Like I talk about dividend investing just strictly because I want to. I'm passionate about it, and I want other people to be able to take control of their financial futures, and that's what you want to do as well. You want to educate and like you said, not financial advice, but the more you know, the better informed decisions you can make. So I do have a follow up question on one thing that you said earlier. So you mentioned that you got really started with investing in 2019 and then got into dividends after that, after you made like some, pit stops on other methods. Um, when you were investing, so you were still relatively new at March of 2020 when that whole COVID crash happened. Were you ready and like mentally where you in theory should be, where when good things fall you buy more of them, or were you still like in new enough that you were like, hey, wait a minute, everything's going down, I'm a little scared of this? Where were you at in your journey at that point?
So the good thing was, let's see, I would say I probably started around July 4th with my dividend portfolio in M1 Finance and started messing around with E-Trade. I actually picked up a lot of shifts during the pandemic and before I started NP school in the fall of 2020 because one, my mutual fund that I have for my 403B, the price per share was down. And I said to myself, okay, there are a big dip, that'll probably recover. Um, I threw a lot of money in Realty Income, Arbor Realty Trust. Gosh, I'm trying to think what other ones. Main Street Capital, a lot of financial sector stocks, Key Corp, Regions Financial, and I'm still targeting those sectors actually because they haven't really recovered
Mm-hmm.
post pandemic, uh, probably for the next 2 to 3 years. But I really picked up a lot of shifts to kind of get that opportunity. I mean, I do believe in dollar cost averaging, but when there's an opportunity where there's a big dip, I'm gonna kind of kick it up a gear so that I can have extra funds to invest in my dividend portfolio. It has done very well.
Yeah, that's really cool that you. So, when I did an interview on Dividend Dave's channel, the first time I did the interview, I told him when I started, which was like May ish of 2020, and he was like, "Oh, you got in, right when COVID happened," and he was like, "You must have made out like a bandit." I was like, "Well, that's under the impression that I knew what I was doing when I first started, which almost nobody does." So it was really cool to see that you were at that right mindset to understand, like, hey, this is a good opportunity for me to make more money and put more money into these things that are going down because you could easily see how somebody just gets started in investing or dividend investing, and like a month or two later everything crashes and they're like, wait a minute, like I lost a lot of money on this isn't for me, and they get scared out of it. So it was cool that you took the other way.
Yeah, and like people are freaking out about their 401ks at
Mm-hmm.
work, and another thing that really motivated me being a dividend investor during the pandemic was imagine being a nurse working on COVID units and they shut off your 403b matching. They said, "Oh, we don't have any money, so we're not going to match your 403b for a whole year."
Wow.
So I just said to myself, okay, I am so glad I became a dividend investor that because things like this happen, I have another source of retirement and I'm treating dividend investing as a retirement pension. So that was a good wake up call for a lot of people. But for me, I was already prepared. So I started to tell myself, okay, this is good because this is the focus, this is the goal, and yeah, I'm glad that I was prepared for that.
Yeah, that's really cool that you were able to take advantage of that. I people think I'm joking when the market's really hot right now, and I always say like I wish the market would go down 99% tomorrow. Like I'm ready. I have the mindset to I don't need it for another 21 years is when I need like my dividends to actually support my life. So I'm just like, dude, let it tumble, let it go down. We were supposed to have one recession last year and went up 25%. So I don't know where that was, but yeah, it's I'm ready for the next one. I don't really keep a lot of dry powder and stuff, but like as far as like mindset, emotions, like all that stuff is in check. Like I know if I have good quality companies and they go down, I'm just getting those good quality companies at cheaper prices. I don't have to worry about like the companies I own like not being, good enough to support that. Um so next question for you is going to be like what would you identify as your biggest dividend related mistake that you've made so far in your investing journey? And more important than the mistake you made is what lesson did you learn from making that mistake?
I think the biggest one that got me uh JQC, it was like a junk bond. And that one was going down over time, down over time. The price per share was going down over time, and the dividend was going down over time.
Mm.
And I was like talking to Gen X, and he's like, do you realize what you're doing? He goes, look at the trends. And I'm like, oh, okay. So I learned how to study trends. Now, don't get me wrong. I have invested in Zim, not a lot of money, not a lot of money, or TSLY. Um, you know, the reason why I look at TSLY, and we'll probably discuss that shortly, but I still like Zim's business model. They took a big hit, but you know, I'm not going all in. Maybe just a little bit of play money in there because do you know about Zim,
That was
the
the shipping
shipping company?
container one, right?
Yeah, so they were really good and then they went down and they're not distributing a dividend. I mean, it's not the most reliable, but I used it to buy my dividend growth stocks, the income from Zim. Same thing with TSLY and the Yield Max ETFs. I do that. But you just don't want to put all your eggs in one basket with the risky dividend stocks like TSLY or Zim because something can happen. I have probably a small percentage of my dividend portfolio with those, but I'll explain to you why I use the Yield Max ETFs for my M1 Finance dividend portfolio. But I just don't want to chase yield. I mean, that's the biggest thing. And if you are chasing yield, you have to be aware of the risk, you have to be aware of the trends, and you have to be aware of the business model and philosophy while you're investing in it.
Mm-hmm. And I would add to that you want to make sure that if you're chasing yield, like you don't want to have competing goals. You don't want to try to retire early, but also have 20 years left to invest, but also be caring what your dividend portfolio is making today. Like those things don't make sense together. Like that's kind of where I'm at. Like my goal is I'm 29. I plan to retire at 50, but my dividend portfolio, the average yield on my portfolio is 2%. And the idea
Right.
behind that is because I'm building a capital appreciation and my dividend growth rate for my portfolio is 11%. So like my capital's growing, I'm adding a lot of capital. My dividends are growing by double digit percentage every year because I don't need to make 30, 40, 50, 60K in dividends today. I need to make 120K in dividends in 21 years.
And I will say I do own a lot of business development companies. Those are high yield dividend stocks, low dividend growth.
Mm-hmm.
But in the long term, my big focus probably, since they're down a little bit, is to use that income for the BDCs to buy my dividend growth stocks,
Mm-hmm.
and then never put any more money in them again.
Yeah.
So that way I can fund it a lot faster, like a little bit of they call it a dividend wheel strategy. That's kind of what I'm looking at. But the dividend growth always wins.
Mm-hmm.
That's whatever high yield, da 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 da, this and that. Dividend growth always wins. You'll see it with Starbucks. You'll see it with Kroger. You'll see it with Costco. You'll see it with gosh, there's so many really good dividend growth stocks. John Deere, you can see it with
Broadcom.
Nike. Yeah, dividend growth always wins.
Hmm.
So you need to have that mentality that dividend growth will win.
Yeah. Yep. And like I said, all the things that you mentioned, in addition to like just understanding like criteria that you're selecting for your stocks, the timeline that you're selecting for your life, what you want your dividend portfolio to do. So there's a bunch of different goals for that. Do you want it to just fund your vacations every year? Do you want it to supplement your income? Do you want it to be your primary source of income in retirement? Like there's big spectrums of what you want your dividend portfolio to do. So it's really important to understand everything that you said in addition to those things as well. So all right. So next question for you is, how would you say that your dividend investing strategy has changed from when you first became a dividend investor until where you're at right now?
I mean, I still like a little bit of high yield. But again, I still think the main focus is on dividend growth, investing, that's the main focus. Some dividend stocks, some people love Stag. I can't stand Stag because the dividend growth is terrible
Mm-hmm.
um, right now. But it's like if once they finally reach a monthly dividend of 15 cents, you and I will probably be 100 years old the way their dividend growth is.
Yeah.
But the thing is, you start to realize, okay, say like you have money in AT&T, okay, even if they cut their dividend growth is just slow. And then you start seeing all these hikes that people have, like Home Depot. I mean, look at that one. That's just going way up. And then once you start seeing yourself basically getting a raise, you're going to start saying to yourself, okay, I need to put money in these.
Mm-hmm.
And that's kind of what I did probably my half, once I started to learn how to dividend invest, I started saying, okay, this is why I'm in realty income. This is why I'm in this. This is why I'm in this. So, dividend growth, I'll say this 1,000 times, dividend growth wins over high yield dividend stocks any time of the day.
Yeah. Yeah, that's really. I mean, I'm glad you're saying that because like it's good. It obviously supports what I do on the channel, so it's just nice to hear it. Everybody know like the big thing is whether the people watching or myself or you, if we can get out of our way, because like they say there's all kinds of studies talking about like the sometimes the best performing portfolios belong to those that are dead because they just don't touch them. And a lot of times, whether we learn something new or watch a new video or whatever, like we get so squirrel, like, oh, there's this squirrel over there, like we get so sidetracked that we end up losing sight of the main goal, and we end up like our goal was going to work, but then we're moving it in a different way, and then it's going to work that way too, but then we move it in a different way and we never give it time to do its thing.
Right. Exactly. You got to control your emotions and stick to the plan. If you have a plan, stick with it. Don't try to say, "Oh, I'm going to try to be a penny stock investor while I'm dividend investing." No, you have a plan, you stick to it the whole time.
Mm-hmm.
That's the best way. That's some advice that a lot of people say.
Yep. Yeah, I like that. Okay, so speaking of different goals for your portfolio, like I was mentioning earlier, what are some of your short-term goals for your dividend portfolio? So let's just say for the rest of 2024, we're in February now. So the rest of 2024, and then like what are some of your long-term goals for your portfolio? Like what do you want it to do for you, 20, 30 years from now?
So my long-term goal is to at least have $2,000 to $4,000 a month on my quarterly dividends, $1,000 to $3,000 a month on my monthly dividends. So right now I'm averaging maybe about 1,000 to 1,200 with my dividend portfolios in E-Trade and M1 Finance. But really, I also have a goal at the end of the year to have a $100,000 dividend portfolio on M1 Finance, which is about to get there, hopefully in a few months. So that is one goal that I've had. But the biggest thing is just sticking with the course. I mean, I'm starting to work as an NP. I got some, about $10,000 in student loans. I want to be debt free with student loans by either by the end of the year, close to February of next year. So I have a few things you know, that are a little bit of a curveball, but $2,000 to $4,000 a month on my M1 Finance dividend portfolio to reinvest and just never touch it again, just reinvest the dividends for 15 years or so till I'm like in my 50s, like late 50s, 60s. That's kind of the goal.
Mm-hmm.
And I really want to start probably in 2 to 3 years, focus on the powerful dividend growth stocks. I should have enough income on M1 Finance from some of my other dividend stocks, the high yielders, to compensate or and pay for completely the dividend growth stocks like Costco that are out there, the Nvidia, the Apple. That's kind AbbVie. That's kind of phase two with my dividend portfolio. So phase one is kind of loading up so that I can generate funds, so I don't have to put as many funds in anymore to really turbocharge it. But at the same time, I can do lump sum, and just say, hey, I'm throwing 1,000 in Costco today. Next week, I'll throw this amount into Prologis.
Mhm.
So I'm still messing around with the dividend portfolio. It's like a hamster in a spinning wheel right now. So that's kind of what I want to get to, and then focus on really on the dividend growth stocks and have that income from the high yield, low dividend growth stocks to buy the high powered dividend growth stocks. And it's starting to work right now. I mean, I'm having some days like $100 worth of dividends, like buying a share of Starbucks. So it's starting to work right now.
Yeah, yeah, tracking that snowball and the like the drip shares and stuff like that, like that's always fun. Like I think maybe I'm just a spreadsheet nerd, which I'm self-proclaimed, but like I track so many things that like at any given point, if I don't have information like the actual chart to show me something specific, I have the information to show me that, and I can just pull it up and create some kind of pivot table or whatever. So that's pretty cool that you're able to get the dividends from something else and you're rolling it in. I've heard that called the dividend avalanche method. Instead of like the dividend snowball, it's buying
Mhm.
your more higher yielding stuff and then turning that into what you would call higher quality or dividend growth stocks or whatever from there. I really want to like do a really deep dive on that and like educate myself on it. And I'd love to do a video on it, but it's just one of those things where like I know that video itself is probably going to take me a couple weeks worth of research to like see if it works, how popular mistakes on why it doesn't work, or all kinds of different stuff. But okay, so next question for you is going to be like over your course of time. I mean, you've had some regrets and then some brags in there. So like, do you have any stocks that you used to own that you sold for whatever reason that you regret selling, and any stocks that you identified at a really good price or something, and now it's like your best performer? Like, do you have any of those for us?
So one of them that I bought and then sold for a huge profit during the pandemic was Innovative Industrial Properties.
Is that
They have a
IIPR?
Yeah. So I made a huge profit off of that and then sold it and then rebought it. Obviously, you had to wait for that period. So I didn't, um, be get taxes and stuff. But that's one that I'm glad I got. Um, do I have any regrets? I got to think about it. Maybe SPHD. I was a little bit into that and I got rid of it. Just the dividend growth sucked. Um, I mean, again, I was big into SPHD and I ended up selling that, throwing it into O, but I really can't say that right now. I mean, I'm just trying to think. Um, I know Zim took a big hit, but I wasn't really heavy into Zim. I had like X amount of shares, and I mean, one time it was making me like $400 quarterly, which was not bad, which bought me dividend growth stocks. Um, I wasn't, that was just play money with travel nurse pay. So I really can't answer that question. Obviously, Apple's, I wish I could have got Apple when I was in 2010 and all that. I wish I was an investor earlier.
Mm-hmm.
That's probably the biggest regret that I have. I wish I would have done this a lot earlier.
Yeah, I always see the meme pop up on like Facebook or wherever where it's talking about I should have bought a house in 19 or in like in 2008 instead of being in eighth grade. I'm like, yeah, I feel that. Yeah, like that's definitely. I was literally in eighth grade in 2008, and I'm like, dang it, man, why didn't I buy a house? Like silly me. I was over here learning, geometry and stuff, and I should have had a mortgage. But okay, so next, so we know that dividend investing is a very long game, right? You're not doing this to get rich tomorrow, or I mean, some people are, but that's not how it's supposed to be treated. Is it's a long game, delayed gratification. So, do you have any milestones that you're coming up on, or recent achievements that you've hit in your portfolio, and then what role do those play in keeping you motivated to stay on the path for such a long game?
Gosh, For me, honestly, once I hit 40, I'm going to start calculating numbers. Right now, I'm just loading up on stuff because I'm not at phase two yet with my dividend investing strategy. Um, Obviously, a milestone would be probably to make 4,000 a month, 4,000 or more with quarterly dividends, and maybe about 5,000 a month in total dividend income consistently. Um, that one I really can't answer because I really haven't had time to think about it with like being in NP school, graduate school, RN to BSN. I really haven't had time to really reflect on that and think about that.
So,
So
one of the things I tell a lot of my guests this, so if you heard this before, apologies. But one of the things that I started tracking on mine that I think is very fun for people to track. Now, you seem to make a lot more in dividends than I do because like our strategies are a little bit different. So you might change your increments a little bit. But one of the best illustrations I've seen of showing you the dividend snowball. That's what we're all working for, right? Like the more and more money you reinvest it, you make more and more and more. So one of the best illustrations I've ever seen for that is I didn't see it anywhere else. So I'm going to say I came up with it. Is I tracked how long it took me to make my first $100. And then I tracked how long it took me to make my second $100 and so on and so forth. And this is in like career dividend earnings. So it's like just my taxable account, but like not per month or per quarter or whatever, like total from was my first cent to my $100th. How long did that take? And the first one was 394, 395 days. And then I tracked how long it took me to go from $100 to $200. And it's getting progressively smaller to the point where in my last monthly recap that I released on the channel, I actually hit the $1,500 and $1,600 career earnings in the same month. So I went from
that's
14
great.
to 15, 15 to 16 in the same month in dividends. Now, obviously, I was at like high 14s. That put me over 15, probably the first dividend I got. And then 15 took me into 16. But like now it's getting to the point where it's like 17, 18, 22 days from one $100 to the next $100. And like that is a real interpretation of the dividend snowball, how long it takes you to make whatever increment of money. And since you have more dividend income than I do, you might be able to change it to the 200, like 250 or $500. Like how long did it take you to make your first $500? How long is it taking you to make each subsequent $500? So it's just, if you don't track that already, it's
Right.
probably something that you can pull up on a spreadsheet where you track your stuff. Um,
Yeah.
and it's just
I,
it's one of my favorite things to like keep me motivated, just to show you like, dude, it used to take you and these aren't made up numbers. It literally took me 394 days to go from 0 to 100. And then it took me 17 days to go from 1,500 to 1,600.
well, I know that there's a tracking system on E-Trade with dividends. For me, with my mentality, I'm not satisfied yet. Probably at the end of the year, I'm going to start a spreadsheet. So I'm making 1,000 now. I'd probably say 2022 is when I started make like 600 and stuff, and I was like, wow, this is really working.
Mhm.
But everybody's going to be there if they have a good strategy and focus. Well, I don't want to make guarantees, but everybody has a good shot of being there if they stick to their plan and reinvest the dividends and park it and leave it and buy and hold.
Yeah. Yeah, yeah, it's like you said, nothing's guaranteed, but some things are more likely than less likely. It's a
But it's
lot more likely that you get struck by lightning when it's actually thunderstorming than it is when it's a sunny day. So
well, it's funny because people ask me, "Well, how's your spreadsheet? Do you have a spreadsheet and this and that?" And I go, "No, not yet." What?
you
What?
were
What? What? Everybody freaks out. I'm like, "No, not yet." And let me just worry about finishing boards, finishing grad school, and plugging in the numbers.
Yeah, you honestly, you're the first person I've talked to that doesn't have any kind of tracking. That's kind of impressive.
Well, I mean, again, E-Trade's helpful. M1 Finance is a little helpful. It shows you your total dividend
Yeah,
income that I've made, which is like 12,800 on M1. So it's like, hold on, let me, eventually I'm going to do that. Like, that's the best thing about parking and leaving your money. You don't have to freak out about it if you're
yeah,
seeing the numbers,
yeah.
you know?
Yeah, I mean, there's definitely pros and cons to that because, like, there are times, like, I was just talking before. I was like, one of the things that I love about the data I have is I have so much data and I can literally pull metrics for anything that somebody thinks of. But then the crappy part about that is when I do my monthly recaps at the end of the month, it takes me an hour just to update my stuff because like I update it as I go, but like I want to make sure X dividend dates are updated to show the new thing for when I give my screenshot, like my data is not incorrect and stuff like that. So there's definitely pros and cons to it. But like I said, you're the first person I've heard that like other than like the tracking that the brokerage offers, you don't have anything on the side, like no other apps or anything. That's kind of impressive.
Well, if you have your own tracking thing, I'll be glad to discuss it on my channel. If you have your own dividend tracker, you created your own, I don't mind showing yours.
Yeah.
So,
I'll shoot you mine over. And I mean honestly, I can just send you my portfolio too, and you can blur out whatever you want to. I show you mine on my channel, so you can blur out whatever you want to or whatever. But we'll let's get on that after the interview. I'll
yeah.
remind me to talk about that. Okay, so next question, and this was a question that was very hard for me when I first started this interview. But over the course of these interviews, I've gotten more clarity on it. So I'm curious your opinion. So the question is, how and when will you know when enough is enough? So like your goal is like mine to like have enough dividends to like actually like whether it's supplementing or live off of your portfolio, years and decades down the line. But like knowing what we know about dividends, how, 1 year, you could be, say you have a 20-year timeline. In year 20, your portfolio could make you, I don't know, $100,000. But in year 21, you can make $112,000 off that same portfolio. So like, how do you know when you're like, do I hang on for one more year and make 112 or is 100 enough? How do you know that?
Oh, I'd have to calculate numbers. Like I said, I don't even have a spreadsheet. I have to start working as a nurse practitioner and stuff now. Um, right. I- For me, I'd be happy with 48,000 or more. I mean, and then just let it, and then if you have good dividend growth stocks, it'll go up higher and higher and higher. You're getting yourself a raise. I mean, I'd probably love to get to 70, 60, 70 and go from there. Which, if you have good dividend growth stocks, who knows? It could get to 100,000, and a lot of people have retired on 100 plus thousand. Um, I really haven't computed the numbers or thought about that, but again, 48,000 or more would be fantastic. Um, that's something that I've thought about numerous times. I just really haven't thought about that yet because I have so much going on with the here and now. I can't really strategize yet, but um, I'll probably retire in my 60s. I'll just be honest with you. Working as an NP, um, making sure I have enough for retirement and stuff, and with health insurance and this and that, I probably will, or 60, 65. But to use the dividends as supplemental income, and if it overpowers my NP pay, sure, I'll retire. But right now, I haven't really envisioned that because I have goals, I have things I need to focus on. Now it'd be great. Don't get me wrong, it'd be great, but I know what I want to get to, and I kind of have a mentality that I'm never satisfied.
Mhm.
So that's one thing. That's one thing as well. But to get to 100,000 would be fantastic. Some people don't, but even if I'm at 48,000 or 50,000, I'd still be thrilled.
Yeah. Well, I mean, that was the thing that made the question so hard for me in the beginning when I thought of it was just like just knowing like when especially like for us now when we're trying to forecast 20, 30 years from now and like what are because like it's great that Home Depot has a 16% dividend growth rate over the last 10 years, but like what are they going to have 30 years from now? Like that's like it's hard to predict stuff like that. So like but the closer we get to our goals, the more you can actually say, hey, next year, like it's like for instance, Next Era Energy is one of my stocks. Next Era Energy already announced that they are going to have a 10% dividend growth rate until 2026 at least. So like we
Nice.
already know that, but that's 2026. That's 2 years from now. They're not saying, "Hey, until Troy retires, until Troy's 50, we're going to rate like we don't know that yet." So it's like my point of all that is to say like it's really hard to forecast that long ahead. But I mean, my issue when I first started asking this question was just like if I get to the point where I can forecast stuff with, reasonable reliability, it's just like, okay, if I wait one more year, I plan to add another 30,000 in my portfolio in that year. I have a 10% dividend growth rate. Like all these things, I could be like, wow, it's okay this year, but next year it could be even better. And providing, you don't hate your job and stuff like that and your health's still okay or whatever, that obviously plays a factor in it as well. But it's a question I always like to hear people's thoughts and opinions on, because the idea is also not that when I hit 50, I'm done investing. Like the idea is
Well,
that like I am done this version of investing, but there's something else to take me from 50 till I die or whatever. So
yeah, and I mean, if I start making, 30,000 with an M1 finance dividend portfolio and it's really just spinning in circles, that could be a possibility for me. I need to strategize to have certain dividend stocks distributing dividends at a certain time, so that way I can have a good schedule so that I can get to my goal, as well as, imagine making 4,000 a month in a fractional share dividend portfolio, and then that 4,000 goes into buying other dividend growth stocks, so
mhm.
it starts spinning in circles. So it's that's the plan. But right now, and just next 3 years is kind of a here and now thing.
Yeah.
Changing careers and stuff. That's kind of the focus right now. Of course, reinvesting dividends, growing my dividend portfolio in IRA is important. But right now, I kind of have a little bit of a focus with my phase one of my dividend portfolio, so that I can possibly get to that point.
Yeah. Yeah, I like it. Yeah, like I said, there's no right or wrong answers. It's just I always like to hear people's opinions on that. So do you have any specific criteria or metrics that you use when selecting a dividend stock? Like, say you have $2,000, you want to start a new position in a holding. Like, how do you go about picking that holding?
Well, right now, like I said before, my big focus is the real estate sector and financial sector, the business development companies, the REITs. Of course, you get taxed on them different with BDCs and REITs, but they've been so down. That's been my focus. Um, you got to have good revenue trends. You got to have companies that are in demand. Like if you look at Kroger, you look at Costco, they're in demand. Look at how busy they are. So, I got to invest in powerful dividend growth stocks that are in demand. Prologis, and a lot of them. Revenue trends have to be good. Dividend growth has to be good. Um, Reliability has to be good. For example, like if you go to Starbucks, people are in line at Starbucks. They can make their own coffee, you know? Um, so they're in demand. People can make their own stuff and they don't have to have a McDonald's breakfast sandwich. So, um, you know, I like, 3 to 5% dividend yield. But again, Starbucks is lower and all them, but I kind of have like a melting pot with my dividend investing strategy. With the high yield, the low yield, high dividend growth. I just need to see good dividend growth trends, good revenue, in demand companies be successful and very busy. Like Home Depot, they just hike their dividend. Home Depot is always going to be busy. I don't care if there's a pandemic or recession. People are in Home Depot and they're making money.
Mhm.
So that's kind of what look for with a lot of dividend growth stocks.
Okay. So I mean, it sounds like you keep it relatively simple. That's the way I do it on my channel too, or not even really on my channel, just my investing styles that way as well. So, I'm curious for you, how important is staying diversified in your portfolio, and like what metrics criteria do you use to help make sure that you're not like if you care about diversification, like what metrics do you use to make sure you're not like overly one overly diversified, but two also like overweighted in a position or a sector or something?
So I'm really probably balance wise, I'm really heavy in the real estate sector and financial sector. I have realty income. I have um, EPRT. I have IIPR. I have a lot of REITs right now because they haven't rebounded. But again, CubeSmart. I mean, you see on the highway CubeSmart all the time. I'm really heavy in those sectors, the financial and real estate, just because they haven't done well against the S&P. They're at a discount, but you have to have a balance, and I fully agree with that. I'm a little bit in healthcare. I have Pfizer and stuff, but that's one thing I will eventually, once I start evolving my dividend portfolio, that I need to focus on. But I am just heavily invested in real estate and the financial sector right now. It's too good to say no to right now.
Yeah. Yeah. And I mean, supposedly we're supposed to have, interest rates drop and stuff like that. And everybody's, forecasting that when that happens, the real estate sector is really going to kick off. So we'll see. I mean, nobody knows for sure, but we'll see what happens. And if I know a lot of people that are loading up on REITs and stuff like that now. So if it ends up turning out like that, then you guys will make out like bandits. I personally don't own any REITs in my taxable account. Like I own a house, which is a REIT, and then I also own VNQ in my Roth IRA. Just because I didn't want to have to pick, one or two or three or whatever, and worry about like if it is or isn't the right decision. So I was like, I'm just going to own VNQ. It's the real estate ETF from Vanguard, and I own all of them. So, okay. So next question. This one, I might end up removing this question just because like I feel like it's in my head. It makes a lot of sense, but I haven't figured out a way to like correctly ask it. I'm gonna try it again. Are there any? I mean, I always see you on Twitter. So you're at least on the social medias. So you might have a good answer for this. So like, are there any dividend related myths or misconceptions or just things that you hear all the time about dividend investing that just are just not true and you want to clear the air on those things?
Like, give me an example. I mean, there's
The example I always give is like when people always say that dividend investing's for old people and you shouldn't really like if you're young you should stay far away from dividend investing. You're way better off into growth stocks and stuff like that. And that I just like first of all, people are under the impression that like you can either have a dividend stock or a growth stock. It can't be both, which isn't true. And then also people are under the impression that like you need to like only focus on growth when you're young. And I'm just like, you can invest in the dividends when you're young, as long as you're doing it, quote unquote, right. And that will compound. The more years you give it, the more years of compounding you have. So like, I just don't, I hear it literally all the time. I'll see this portfolio, this profile saying, stay away from dividends. Dividends are for old people. Like use those in retirement or whatever. And I'm just like, that's not true. Like stop doing that.
I think there are a lot of people that don't like dividend investing, and it's their choice. And there's a lot of these certified financial planners that bash dividend investors, but I'd like to see their returns.
Mm-hmm.
So I'd like to really see their returns, and as long as they're not pumping stocks. But I mean, Nvidia, that's a dividend growth stock, and it's a growth stock. I mean, I would consider that, the way it's growing. Costco's, growing. It's beating the S&P 500. Nvidia is, Apple is.
Microsoft,
I think
Visa.
you can do what's that?
I said Microsoft and Visa.
Yeah, I mean, they're beating the S&P 500, and Meta just added a dividend. So you can do both. I don't know, just, it is what it is. Everybody has a different investing philosophy. My cousin's like that, but he's starting to read books on dividends. He makes way more than me. He works for what is it, Wells Fargo right now. He's way up there. That guy could easily retire on six figures of dividends if he wanted to. I just say whatever, fine. Go ahead and attack me or making a post about dividends. That's fine.
Yeah. Yeah. And yeah, a lot of it's like to me, because I'm also like, I'm in the fitness industry too. And it's a lot of like people will find the smallest speck of truth and then they'll just hitch their wagon to that. Even though, like at the end of the day, me and you are in the financial space again, not professional financial people or whatever, but like we're in the financial space. Our goals as a community shouldn't be to say things that you're doing wrong, say things that I'm doing wrong, and like everybody's doing wrong. It should just be like, hey, like what can we agree on? What are some core principles that, because at the end of the day, us arguing just makes it cloudier and murkier for the people that aren't into investing but want to get into it. Because you're going to find
Yeah,
somebody that gets into, like, they have no idea about anything investing. They're like, hey, I saw a couple videos on dividend investing. I really want to get into that. But then they'll see 3 or 4 posts saying dividend investing's awful. Like, it sucks. Like, stay far away from it. They're like, you need to be in penny stocks. And then they try to do that and they get burned there. And then they're like, oh, investing's not for me.
the funniest thing was too, there was a guy that I used to collaborate with who was a dividend guy, and he started attacking dividend investors. Like
Hmm.
he like all of a sudden pumps. Well, I wouldn't say pumps, but he promotes Palantir and all this stuff. And some of his buddies would attack dividend investors. It's like, dude, like all of a sudden you converted, your YouTube channel's not doing well. I mean, all of us are outgrowing you. There was a little bit, it was a little weird, like for all this, and he was making up my trades and stuff and sells and stuff. And it's like, we don't need that negative energy.
Mhm.
I mean, to be honest, DivX does not need that negative energy. So I'm glad, those people usually get phased out over time. But we are a specific community, and that's what we focus on. So, if you want to be a growth investor, if you want to talk about Palantir, that's great. But I'm not going to attack you because you like Palantir or these other stocks. There's a little form of, I do think there's a little form of jealousy that because we're growing really fast and people are starting to realize that you can actually have your money make money. And I really think it's starting to get some people jealous.
Mhm.
I really do.
Yeah, and I mean, not to make any of this political, but one of the things that I would appreciate for like finance or anything actually, whether it's baked goods or anything, like I would really appreciate if people in the dividend space or people in the growth stock phase or people in the penny stock space or whatever it is, I wish we would just all agree to not bash another one and instead just tell everybody why ours is good. And then when new people come into a space, whether it's investing or fitness or whatever, like you don't have, if you're a power lifter, you don't have to bash bodybuilders. If you're a bodybuilder, you don't have to bash CrossFitters. Like you don't have to bash any of it. Everybody just put out there, make a pamphlet, like a virtual pamphlet, and say, hey, these are the good things, the good qualities that my style of weightlifting or my style of investing, this is what we offer. And if you want to know more, come on in. Instead of saying, hey, dividend investing is the best, and that's one thing we're going to tell you about dividend investing. It's the best, and all these other ones suck, and they list 37 things about the other ones sucking. I'm like, that's how you make it cloudy. That's how people don't get started. And that's just how I've always thought. I'm just like, you don't have to. Bashing people is easy. Putting fire on your videos is easy. Putting your hand in your head and, saying the stock market's going to go down 74% tomorrow unless you watch this video, like that stuff's easy. But what's better is just to put out quality content, let your content speak for yourself, or not even your content, let the information of whatever it is you're trying to, bring people into, let it speak for itself and let people make the decision without, bashing everybody else. I think it can be done.
Yeah, I just think it's kind of disrespectful, and it's kind of a mirror reflection of the individual
Mm-hmm.
attacking somebody else. I mean, I used to be an exercise physiologist. I used to do cardiopulmonary rehab and stuff, so I kind of understand. Are you a trainer or what are you?
No, I'm a competitive level power lifter. So like I've done like
Okay,
national meets, state meets, stuff like that. So
nice. Hey, good for you.
yeah, it's I haven't done a meet since nationals. Actually, it's been not November of 23, but November of 2022 was my last meet. I was healing over some injuries. Then we had a kid in January of 23. So like I haven't really had like good training cycles and stuff like that. But yeah, I really, and like the cool thing, and I've said this in a couple other interviews before, but the cool thing about like getting into the exercise and fitness is it relates so well with dividend investing that it's not even funny. For example,
Yeah,
like I have a state record for bench press in Oklahoma at 336 is what I benched at 165 body weight. Technically I was 164, but 165 is my weight class. So I did a double body weight bench press. I still remember when I first started weightlifting back in 2012, going to Planet Fitness. That was my first membership. And I remember going on the Smith machine. Bars there are only 25 pounds on a Smith machine instead of a 45-pound regular bar. And I had a 10-pound plate on each side, and that was what I was benching. And that's the show. Same thing with dividends. Like literally start somewhere. You're not going to get strong unless you start lifting lightweight and then heavier weight and heavier weight and heavier weight. Same thing with your dividend portfolio. You're never going to make $100,000 in dividends unless you get started.
right, exactly. And that's the same thing with lifting because I mean, I'm big into lifting too. And at one point I was doing dumbbell presses of 120 pounds, weighing about 168 or something like that. But I'm going to get back there. I finally have to really have a lot of time to work out, but it's just baby steps.
Mm-hmm.
I mean, remember that first time you started repping 135? You're like, ooh, yeah,
Yeah. Yeah. Hitting
and then
135 on bench was a big milestone. Hitting 225 was giant. That first time I touched 315, I was like, hey, my life goals are complete here. We're done. We're like, I achieved everything you need to achieve. But yeah, and like it all like you're saying, it starts somewhere. When I hurt my pec right before nationals, I didn't have a great national bench because of that. And then I literally gave myself some time off, hurt my pec again when I was trying to come back because I tried to do it too quick. Just like investing, when people try to do it too quick, they're too risky. You get burnt, hurt my chest again. And then it was like, okay, I'm not going to do any chest for a couple weeks, give it really time to recover. And then I literally did what you talked about. I started with, I think it was 30-pound dumbbells. Went over there, did like 8 slow and controlled. Good. Every week I was like successful at getting my 8. I would go up 5 pounds until I got up to like, it was like, I don't know, I don't remember what it was, 125, 130, somewhere around there. Cause my gym goes to 150, which I've only touched those twice. But I did all the way up to like 130, 135. And then I was like, cool, now I'm good enough. Let's go over to the bench press. And then I started the same thing there. I started with a plate, really got good form, slow and steady wins the race kind of thing. And I just, kept at it in little increments over time, just like dividend investing. It's the same thing.
Yeah, and so are you a big Oklahoma Sooners fan, or are
No,
you?
I actually hate the Sooners because everybody here is insufferable. I'm so weird story. I'm from Pennsylvania. I'm a Dallas Cowboy fan, and I'm an Oklahoma City Thunder fan, and I cannot stand any Pennsylvania teams. So the Eagles is my biggest rival, and I don't like Pittsburgh just because I don't like Pittsburgh. But yeah, and me being a Texas fan, and I live in Oklahoma, so that doesn't go over well. It's just, I don't know. OU fans just drive me nuts, man. I can't stand OU fans, but
Well, I was there when Baker Mayfield beat Ohio State. I was
yeah.
at that game, but as you know, with Texas, they're back.
Mhm.
Okay, so the thing with
Allegedly,
Texas,
we're always back.
well, no, they have a good coach,
Yeah.
good system, good principles. That's growth is there.
Hmm.
It's the same thing with dividend investing. Sarkeesian, you get the right tools, the right players, in-state players from Texas, as you know, the best in-state players from Texas. If they go to Texas, they're going to win. The best in-state players, they're same principles and discipline and everything. Boom, look, they made the playoffs.
Yeah.
So that was a
Yeah.
big deal.
It is, and it's that honestly, like, and that's one thing that's cool is like if you can relate multiple parts of your life together, it makes everything click so much better, and it keeps you more accountable. It keeps you more disciplined in like getting to all of your goals. Because like I realize that powerlifting and dividend investing and just being overall what I would consider to be successful in life, all of it ties in. It's all about little wins day after day, doing it when you don't want to, but when you need to. Like there's several days where I'm like, oh, okay, today I get to go squat and today I have to squat 460 pounds. Like that's not fun. I don't like doing that. That sucks every time I have to do it, but it's what it calls for today. And I've always said since I've started lifting, honestly, I feel like the most gains, like gains, whatever you want to call them, muscle gains, spiritual gains, mental gains, whatever. I feel like the most of that comes from the days that you did it when you didn't want to.
Yeah, and the thing with the community too, like these people who have done really well, Dividend John, like he made a post and going back in the community, he made a lot of money. He just posted, I think it was a bank stock, Canadian bank stock, how much he made. And then somebody just attacked him, well, dividends, this and this and this and this. And it was that same person I referred to before. And then he just decided to promote Palantir and his name. It's like, why are you attacking these elite dividend investors? Even elite dividend investors get attacked. I find it hilarious. It's like these guys are making like $80,000, $90,000, like, and you're going to attack them. You're just going to get that in the community
Yeah.
sometimes.
I mean, you have people calling Warren Buffett an idiot, so that shows you where they're at.
Yeah, look at Kathy Wood right now. She's not doing too
Yeah,
well.
yeah, yeah. I agree. Okay, so last question for you is: say you had all the knowledge that you have today, but you were just magically 18 years old. So you were not going back to when you were 18 years old, but we are taking all the knowledge you have today in today's world, but you're just now 18. What tips do you give your younger self? What do you do as your younger self to set yourself up for success? You'll probably retire at 40 if you start when you're 18.
What would I give myself? Well, my summer jobs, obviously save for school books. Don't go in my first degree in exercise physiology, but go after Apple. Go after Apple. Apple and Microsoft. So
So that you mean like at today, like current
at
environment
that
today?
time,
No, no,
yeah,
no,
at
no,
that
no.
time.
That's too simple. Like I'd go for
Okay.
Nvidia. But what I mean is like everything, whatever it costs today, is this everything's the same exact way. The current environment, the interest rates, everything's the exact same. You're just 18 and you have your knowledge.
Um, Probably be smarter with money. You don't have to go out all the time, to fit in. That's probably the biggest thing because, fitting in, you're trying to figure yourself out. At that age, you're going out with people that are toxic, your toxic group of friends that you leave eventually. Stay away from the negative energy and the negative crowds because it'll probably bring you down. Um, that's probably the biggest thing is just with money, like understanding the value of the dollar. Probably, I would have appreciated my cheaper Camry, my 2000 or 99 Camry, a lot more as I drive a 2012 Camry right now and paid off in cash. Um, it's probably just appreciation of money and just realizing that time is precious.
Mhm.
Probably my value of time now is a lot more different than it was.
Yeah. Yeah.
That's probably
I
the
like
biggest
that.
thing.
Cause I mean, that's the only thing you can't get back, no matter how much your dividend portfolio is making, whether it's $1,000 a year or $100,000 a year. Like you can't, like I started investing quote unquote relatively young. It was in 2020. I was, I don't know, 26 or something like that. 25. I don't know how old I was, however old I was. Like knowing what I know now, if I could just take that same information, the same stock market we're in today, and just be like, dude, you're 18 years old. I'm loading up on the S&P 500. Literally, if I had to start all over, and I'm doing this with my son, we're not investing into anything different until he gets QQQM and his VOO position to $10,000. Once we get to that, then we can start sprinkling around if he wants to. If he shows no interest in it, we're just gonna keep piling into both of those and just build his nest egg. Like he needs to have, but he's going to have literally, if he wants to retire at 40, I opened it for him when he was born. If he wants to retire at 40, he'll have 40 years worth of compounding the S&P 500. That's how you do it.
Nice. So the one thing with VOO, I actually, it's a great ETF. I actually am in SPYG,
Mhm.
which is actually, I'm pretty sure you can correct me if I'm wrong, outperformed VOO in the past 5 years. It's the S&P, but it focuses on the growth. I'll probably have to discuss that with you in the future,
Mhm.
refer you to a future YouTube video. But I got rid of actually SCHD in my IRA and then used SPLG to replace it and then replaced it with SPYG. But VOO is fantastic. What a great Vanguard, I mean, fund, the expense ratio, dividend growth. You can't go wrong with that.
Yeah, it's at the end of the day, like it was like, so for example, I mean, not to add more to the conversation, but like one of the things I did recently was I bought UPRO, which is a triple leveraged S&P 500 fund. And that's the first time I've ever touched leverage at all. And it's not on margin, it's not on anything fancy, but it's literally whatever the S&P 500 does, it does 3 times that. So there's days where the S&P goes down 2%, this goes down 6%. But the days where the S&P 500 is up 2%, this is up 6%. And long-term returns would tell you, what has the S&P 500 done decade over decade over decade? Become more expensive than it used to be. So long-term returns just tells me, hey, it's in my Roth IRA. I'm just letting it go. I don't have him in it yet. I mean, arguably I could, because I think, what is it? There's not a 20 or 30 year period where the S&P 500 had negative returns. So if I have him in this thing for, 30, 40, 50, 60 years, like there in theory would be 2 blocks of time that it wouldn't go negative based off of history. So, but that's one definitely to look into. UPRO, it's one of my newest holdings. I'm already up over 20% on it, and I bought it in the beginning of January in my Roth IRA, so it's doing really well for me. I mean, if last year the S&P was up 24%, 24.95 or something like that, so that thing was up 3 times that.
Wow.
So yeah, it does.
Is
It
the
does.
expense ratio good?
It has I think 0.99% expense ratio, which is obviously way higher than like a Vanguard fund. But when you go on Dividend Channel and put like UPRO versus VOO, the expense ratio is tracked in its performance. So like when it says it outperforms like 1.4 million to 300,000 or whatever it would be, whatever the numbers would be,
that's including paying the expense ratio. And that's also with dividends reinvested and stuff like that. So, I mean, a 0.99% expense ratio for, at that point, it would be, instead of 300% outperformance of the S&P, it would be 299% outperformance of the S&P. I'll take it. Like, I guess it's okay. But yeah, look into it. Not financial advice, but it's one of the ones I'm putting in there. It pays a dividend. Not huge. You're not retiring off of it, but when you can 3 times the performance of the S&P 500, why not?
Yeah, it's pretty impressive.
Yeah. So, but anyway, Gary, aka Darth Dividend, it's been a pleasure speaking with you. I hope everybody. So make sure, Gary, you're going to send me links to your YouTube channels and anywhere on social that people can find you. Those will be located in the description. Make sure you go check out Gary's YouTube channel, Darth Dividend. Let's help him get to 15,000 subscribers. He puts out a ton of content, way more than I do.
You.
So go check him out there. And Gary, if there's any closing remarks you got for everybody, let them know.
Well, first of all, the stuff we're doing is not financial advice, strictly for entertainment purposes only. The other thing is, next, if we do round 2, we'll definitely need to discuss these yield max funds. This is going to be very interesting because I am invested in them. There's a big risk with them, and people need to be aware of the benefits versus risks of yield max. So it's probably, I could see that being a 20-30 minute discussion. The other thing is, a lot of you guys are new or watching this video for the first time. Keep on going. Don't stop. Stay positive, stay focused. And like what Troy was saying, when it comes to training, you're going to have setbacks. Things are going to be a little rocky, but you have to stay focused on the course. And that's important. So if you stick to your plan, usually that goes well. I can't give any guarantees, but if you have a good strategy, stick to it and keep on going.
Yeah, I agree with that. Yeah, so everybody, like Gary said, stick with it. Stay tuned. Gary and I will definitely link back up and have other discussions as well. So be on the lookout for those. Make sure you follow Gary in any of the links that he provides me down in the description. Go check out his YouTube channel. Show him some love over there. And Gary, until next time, we'll talk to you later.
Yeah, thank you for having me on.
And that's going to wrap up this week's discussion. I really hope you enjoyed my conversation with today's guest, and thank you for spending part of your day with us. Remember, if you want to be on your very own episode of Dividend Discussion, make sure you reach out via email at dividendobsession@gmail.com, and I'll be in touch. But until next time, see you.